Today we're diving into the 7 biggest money mistakes homeowners make that keep them broke. Whether you're a first-time buyer or you've owned your home for years, these pitfalls can quietly drain your finances if you're not careful. Stick with me till the end because I'll not only show you how to avoid these mistakes, but also share a free resource that could save you thousands of dollars every year. But before we jump in, let's make sure you hit that subscribe button and turn on notifications, since we bring you straightforward financial advice every week to help you build wealth and make smarter money decisions. So let's start with number 1, the most common mistake: buying a home that stretches your budget too thin. You've probably heard the term house poor. This happens when a huge chunk of your income goes towards your mortgage, leaving little room for savings, emergencies, or even enjoying life. Experts recommend spending no more than 28% of your gross monthly income on housing costs, including your mortgage, property taxes, and insurance. For example, if you earn $5,000 before taxes, aim to keep your housing costs under $1,400 a month. Yet many people exceed this limit because they fall in love with a house that's just out of their price range. Remember, banks may approve you for more than you can realistically afford, so it's up to you to set boundaries. Number 2, not shopping around for mortgage rates. Did you know that failing to shop around for mortgage rates could cost you tens of thousands of dollars over the life of your loan? According to Freddie Mac, borrowers who get at least 5 quotes save an average of $3,000 on their mortgage. Don't just go with the first lender or bank to talk to you. Compare rates and terms from multiple sources. Also, pay attention to the APR, annual percentage rate, not just the interest rate. The APR includes additional costs like fees and closing costs, giving you a clearer picture of what you'll actually pay. Number 3, owning a home isn't just about paying the mortgage, it's about maintaining the property. A good rule of thumb is to budget 1 to 3% of your home's value annually for maintenance. So if your home is worth $300,000, set aside $3,000 to $9,000 each year for repairs and upkeep. Skipping this regular maintenance can lead to costly surprises down the road. For example, neglecting roof repairs might save money today, but could cost $10,000 or more when it needs full replacement later. Number 4, overlooking property taxes and insurance. Many homeowners underestimate how much property tax and homeowners insurance can add to their monthly expenses. Property taxes vary widely depending on where you live, but can range from 0.3% to over 2% of your home's value annually. For instance, New Jersey, the state with the highest property tax, the average owner pays over $8,000 per year. Homeowners insurance is another cost that can creep up on you if you don't shop around or bundle it with other policies like auto. Make sure you're getting adequate coverage without overpaying by comparing quotes regularly. Mistake number 5 is using your home as an ATM. Home equity loans or lines of credit, also known as HELOCs, can be tempting when unexpected expenses arise or when you want to fund a renovation. But borrowing against your home can be risky if it's not done wisely. Remember, your home is collateral for these loans. If you can't repay them, you risk foreclosure. Use home equity sparingly and only for investments that will increase your home's value, like necessary repairs or energy-efficient upgrades, not for vacations or non-essential purchase. Mistake number 6 is skipping an emergency fund. One of the golden rules of personal finance is having an emergency fund, and this is especially critical for homeowners. Without one, unexpected expenses like a broken furnace or plumbing issue could force you into debt. Aim to save 3 to 6 months worth of living expenses in an easily accessible account. This safety net will protect you from financial stress and help avoid high-interest credit card debt when emergencies strike. Number 7, forgetting about refinancing opportunities. Interest rates fluctuate over time, and refinancing your mortgage could save you thousands if rates drop significantly below what you're currently paying. For example, if you have a 30-year mortgage at 6% interest and refinance to 4%, the savings could be substantial over the life of the loan. However, refinancing isn't always free. There are closing costs involved, so calculate whether the long-term savings outweigh the upfront costs before making a decision. So how these mistakes add up. When combined, these 7 mistakes can cost homeowners tens or even hundreds of thousands of dollars over time. But here's the good news. By avoiding these pitfalls and making smarter financial choices, you can build wealth instead of draining it. So, before we wrap up, I want to share something that could help you save even more money as a homeowner. We put together a free guide packed with tips on government programs and saving strategies that could save you thousands annually, from tax credits to energy rebates and more. It's all there. Click the link in the description below and download it now. Don't forget to subscribe so you never miss our weekly financial tips designed just for people like you. See you next time.